Welcome back to the Kelowna Real Estate Podcast. I am your mortgage broker host, Taylor Atkinson.
And I am your agent host, Matt Glenn. What's going on today, Taylor?
Yeah, you know what, Matt? I've got some mortgage broker information for you.
Lay it on us.
Delinquency rates for mortgages in Ontario have gone up 135.2% compared to previous year, while in BC, they've gone up 62.2%. How do you feel about that, Matt?
Okay, so I was reading into this a bit, and those numbers sound pretty high. But when you take into account how low they are, to go up 135% or even 62% is not that much overall. Is that
very impressive?
Right?
You know, it was a leading question. I was trying to kind of catch you in a shock and awe, but you're 100% right. So the interesting data on that is it's 0.13% of mortgages in BC. Like it's literally under 0.2%. It's a non-story. And the interesting part, I'll share this chart. Essentially, in the last 25 years, we're at historic lows in these delinquencies. They rose in 2012 to a high of 0.5%. So we're a fifth of what we were in 2010. Now they are trending upwards, obviously, but like this is not an issue that people should be concerned about. It's just more bad media attention. Obviously, there are a bunch of renewals that are coming up in the next 2 years, and people will feel that payment shock. But there's a lot of equity, a lot of amortization left to play with. Just don't get caught up in those bad headlines. So good for you, Matt. Look at you, man.
Well, honestly, I know you're trying to get me there, but like I literally was just reading that story. So like, damn, good for me.
yeah, you're on it, man.
Yeah. Canadians, we're really good at paying mortgages, like compared to everyone else. Like I think I was also reading about this, and I can't remember what the numbers are, but like we're like in the top, I think 3 of paying mortgages. So
yeah, and I mean that also goes hand in hand to, although we didn't love the stress test when it came out, but you know, the regulation kind of built this in that we had essentially people approved to afford these style of mortgages, you know, 2, 3, 4 years ago when we first started to get them approved in these products. So people should technically be able to afford this. It's not to say like we're not empathetic of the difficult times everyone is having, but I just wouldn't get overly concerned that, you know, we're going to see a bunch of foreclosures on the street.
Yeah, exactly. And like you touched on before, like there's so much equity out there that, I totally agree with that. So did you hear the news about City of Kelowna is allowing the fourplex thing, the 4 houses on a lot to go through the Heritage Corridor on Abbott? I don't think it applies to Heritage houses on Abbott, but there's a group hoping to get exemption for the Abbott Corridor. Not on the table. That's
pretty crazy to me. Honestly, they've worked so hard. And I know someone that's renovating, well, he's like completely torn down and rebuilt a house in that area, and the guidelines that he had to follow were like so strict. Honestly, I kind of like it that way. Like Abbott's such a cool street to walk down. I don't fully agree with densification
guidelines where it has to kind of look the age or like kind of look like character.
Yeah.
I don't know if that's true or not, but it sounds like it'd be reasonable to do that. Guy from the city, I can't remember his name right now, was saying that they're not expecting this to happen soon because the lot sizes on Abbott are not that big, apparently. Although I can think of a few lots that are kind of gigantic there.
I don't know if it'll make economic sense though, really, because those lots, you're going to be paying like $2 million for a teardown house to build a fourplex. It does not make sense. Like you're never going to get the rental income. You're never going to get the resale. Like those specific properties are more of a luxury, high end, somebody that wants to be close to town, so it doesn't really make sense to densify there.
It doesn't right now, but what happens in our next boom, like a 2021 style where you just go in, you pay over market, the market just catches up to you, right? So like it doesn't right now, but I think in the future it will. And also like the Abbott corridor has been there longer than Kelowna has been a city. So like if you think about that into the future, what does that mean? You know, like, I think that's a big deal. Interesting.
Well, speaking about next booms, we kind of spoke about this a little bit. So we brought on Scott Peckford today. He's broker owner of BRX Mortgages, Kelowna-based guy. He's been in the mortgage industry for a long time, has a huge following, and has done a lot for the mortgage industry, and myself included. So really great guy to have on the show. And fortunately, he's got over 1 million downloads on his own podcast, so almost as good as the Kelowna Real Estate Podcast.
Yeah.
No, he's helped us a lot helped me, helped us. So yeah, super stoked to have him on. But one of the things we spoke about was essentially they can try and follow the real estate boom or bust by seeing how many credit pulls are being done within the brokerages as a mortgage company. So, I mean, he kind of tracks the data, and he says himself he's always bought at the worst time. So maybe he's not the best guy to speak about this, but it is interesting because we start to do a lot more credit checks as we're doing pre-approvals. And so he's seen that in his brokerage. Other kind of brokerage talk, as always, we're sponsored by Century 21, almost like a second home to me. You know, my wife, Emily, works there. You work there. They've always had like a very open door policy, been supportive of my business as well. So yeah, shout out to those guys.
And it is the best brokerage in town. You know, like being an agent can be a little bit lonely. Our job is to talk to people all the time, but we're really in the business on our own. So Century 21 is a great place. Like your business on your own, but you're not alone. You know, like we are very communal. It's a nice environment, help each other out. One of the main reasons why I'm still there. You can kind of come hang out in the office, bounce ideas off each other, get some motivation fired up, and go get some listings. So it's a great place to be.
That's a selling point for me. I just want to go hang out with Matt in the office.
Yeah.
We'll dive into the show here. Enjoy it, guys. Scott Peckford. Give him a follow on his social media. He's putting out a lot of good content. And hey, if you are a mortgage broker and you're looking for a change as well, feel free to reach out to me or Scott directly. They are building like quite a large brokerage, so can definitely walk you through how that looks. Enjoy the show. Okay, welcome to the show, Scott. Thanks for joining us.
Thanks for having me.
Yeah, we like to start our show with just you connecting with our listener. What's your perfect productive Friday look like? What do you do for fun leading into the weekend?
Okay, so I usually get up at 5:45. I do a stretching routine every morning because I have a disc injury that I'm almost over. And I listen to a podcast, usually something like, actually, I listen to your podcast only, actually, every day.
Yeah, thank you.
Yeah. I almost said another podcast.
You can stay.
I listen to a podcast, I do the stretching, then I do like a quick mindset, like reset my mind, and then I get to work. You know, my days are pretty scheduled, so everything is like, I've got great support around me, so it helps me stay hopefully in my lane of where I think is my unique ability as much as possible. I would like to be 80% unique ability. I'm probably 25%, but the more support and staff I put around me, the more I can do that. And then I don't usually do a lot of external meetings in the mornings. What I'll do is I'll do my creative work because that's when I'm most creative. And then afternoons will be meetings and, you know, anything to do with that. It's usually how I like to do it. I've been doing a lot of thinking more lately about energy management than time management. Like most people, at least I feel like I have certain times of the day I'm very productive and very creative, and I want to use that time for that type of work instead of going, well, I have to do it. So I'm really thinking about energy management a lot. And I even, you know, I plan a workout at 2:00 in the afternoon so that I have energy in the evening. Otherwise, sometimes if I just keep working till say 4, I'm usually so fried, and I find doing a workout at later in the afternoon actually gives me like a second win for the day. So it's kind of like a perfect day for me. And then the weekends are just whatever. It's kind of, you know, family, and my kids are in volleyball and motorcycle racing and whatever they're doing. That's what I would like to do my weekends, is just do stuff with them.
Nice. Are you still on the ice bath train? I know you're doing.
Oh yeah, I still do that. I do it every day that I'm in town. So I started it, I don't know, 120 days ago. Out of 100 days, I did 95 out of 100. And I was pretty like, whenever I'm developing a new habit, because I have ADD, what I find is I'll go extreme for the first 90 or 100 days so I can build that new habit. After that, I can let myself have a little bit of, because even during that first 100 days, like when I would go on vacation, I'd be in the hotel, like, you know, taking all the ice to the ice machine and everything. And they're like, what the heck's wrong with you, right? And I'm like, so now I'm like, you know, I'm on vacation, I'm not going to worry about it. But I have a setup at home now that I still do the cold plunges every day.
Yeah. I just did. Have you heard of the sauna on the lake?
No.
The name of it. Yes. Yeah. So they recently built this sauna on the lake, and then they have a little cold plunge spot. It's right down near City Park basically right now, and I think they'll move it in the summertime.
That'd be awesome. How did I not know? That's because I leave my office. I gotta go check. Is it still available? Or
Yeah. So you book it online. It's a 7-person sauna, so you can either rent the whole thing or you can just buy like a single seat, and maybe there's other people in there. So I went this weekend with a few guys. Man, the lake is cold. Like, I know you're doing ice baths, but like I was freezing in there.
Well, so I set the temperature. I've got this tub that I had built, and it's 5 degrees Celsius, which I think is about lake temperature, 4 to 5 degrees. The movement of water makes a difference. So I'm jammed in there, so I'm not moving. I know that the actual lake would be colder because you get this little like layer of like warm between you and the cold. That kind of seems to work. So, but I'm going to try that. That's cool.
Yeah. Give it a shot.
That's awesome.
Okay. Well, I mean, tell us a little bit about yourself. Obviously, I know who you are.
Sure. Yeah. So I've been in the mortgage business since 2006. And I started a podcast 10 years ago. And about 5 years ago, I started coaching mortgage brokers, and I was doing that exclusively. And then 2.5 years ago, I started a brokerage, which is new for me. I love the training business. I love the mortgage business. I like podcasting. I've been in Kelowna since 2003. So when the fires happened, I love Kelowna. I try to convince every mortgage broker, you probably don't want me to hear me say this, to move to Kelowna because I think it's the best place to live. But I tell them, do your business in Toronto, but like just live here because the mortgages are bigger there and stuff. So, I just think Kelowna is a great city. And so I love it here.
What made you want to start a brokerage? I know you've spoken about this before.
I think it was a head injury, actually. Just kidding. Well, initially, because the training business I quite enjoyed. In the training business, I never trained people that were rookies. I was like, I will not train rookies because rookies the failure rate's high. There's so much to learn. And so basically we had this thing, you had to be making a minimum of $100,000 a year. We wouldn't let you in our training academy.
Yep.
And then when I had so many rookies reach out, they're like, hey, can we do training? And I was like, and so I ran an experiment and I was like, okay, we can train you on half of this, but to do it well, we actually need to have support. We need to have underwriting support. We needed to build up, and it would be very expensive to run. So I thought, well, why don't we just make it a brokerage and work out a split so that when they're successful, we're successful. And this worked. Like our rookies have funded, I don't even know, like 1,200 mortgages or more by now. We've had tons of grads go through the program and it's been great. And so that's how I got there. It was not on purpose.
And then what about podcasting? Like you're a prolific podcaster. You're one of the inspirations for this show. Like how many episodes do you have?
I'm probably close to 600. People accuse me of being creative, but I'm not. All I do is I just find something in another industry and go, oh, could this work here? And so I followed I Love Marketing podcast with Joe Polish and Dean Jackson. Yeah. And I was like, I'm going to start a podcast. What am I going to call it? I'm like, how about I Love Mortgage Brokering? And literally, if you look at my logo, it looks like I literally ripped those guys off. And for me, the vision, because when I go to a mortgage conference, I would find often in the lobby, sitting there talking to another top producer about their business was way more valuable than the speakers. Yeah. And I was like, well, I can't do that all the time because it's a lot of traveling, and B, I'd be an alcoholic. So why don't I just do a podcast and do the same thing? And so that's how it started I just followed my curiosity. And I almost nuked it a couple times because my work was so busy and I was trying to it was a labor of love. I didn't make any money with it. Yeah. And it was at episode 100 before I got sponsored, and I didn't produce my own show. So if anybody's thinking about doing it, do not do that. That is not a good use of your time. So I didn't produce a single episode. I didn't edit anything. Remember, I got my first sponsor and I was like, this is really cool. Like I'm getting paid to talk to people. Right. So, yeah. And then it just grown from there over the years.
Costs money to start a podcast, as Taylor and I have learned the hard way. It's not come to you free.
It's such a slow burn though, right? So episode 100 was when you got sponsorship. When did you find it really started to add value to your business?
Well, when I started the training company, so however many years that was into the podcast, initially you ran Facebook ads to drive traffic to a webinar, and the webinar then to book call into the training program. And it was working pretty good, but I was up to a point where I was spending, which is not tons of money, but I was spending about $10,000 a month on Facebook ads.
Jeez, and that is tons of money.
Well, I know people spend way more than that, and it was working. The math worked it was a profitable business. Then my Facebook account, they basically banned my ads because they thought I was targeting, because there's some rules around if they think you're selling mortgages on Facebook, you can't target, and because of
those are new estate, you can't target.
You can't target, right? So it's basically so that you can't discriminate. But I'm I'm not selling mortgages, I'm selling training, and of course they banned my account. But you can't get anybody on the phone. You can't I'm only spending $10,000 a month. You need to be spending.
I'll text you Mark's number.
Yeah, you need to be spending $100,000 a month to get somebody probably to talk to you on Facebook. And if I was spending $100,000, they would have. And I have a friend who did Facebook. He said, just set up a new account, start over. And I thought maybe I can just do this all off organic traffic and I can skip the $120,000 a year. And so that's when it became really profitable. I just used the podcast to drive traffic to my training company, and I eliminated, $120,000 a year bill. I did less volume. So it was lower, but the net was higher. I ended up putting more money in my jeans, and I was like, this just makes more sense.
It's funny. I'm trying to figure out now how I found you. And I think it was literally just, I was on Apple, searched in mortgage brokering, and you came up. And so I started listening to your podcast. And so it was that is the lead gen. It worked.
Yeah, it works. And now I have a sponsor for my show. So I feel pretty lucky that I get to talk to my interesting people and I get paid to grow my business. I got a marketing funnel. So it's pretty awesome.
Yeah. Now it's self-sufficient. Are you going to ever get to the point where you would replace yourself
I don't think so, because I like it too much. Like, so if I find interesting guests, so like lately I found some really interesting guys down in the US that are doing some really cool stuff. And so this is a mistake. And if you guys have a podcast, what I found is that, I don't know why I didn't think of this, but I went to a podcast conference and they're like, ask your guest, like, who are 2 or 3 people you know that would be great? And so I get off this show with this guy and I'm like, hey, can you give me some names? Go, oh yeah, I got names. But I asked specifically, I said, so in the US for mortgage, because my podcast is for mortgage brokers. And so the Scotsman's Guide is like, they rank them all. And I said, okay, who else do you know that's in the Scotsman's Guide that I should talk to? And he's like, here, boom. And every single one of them have been like, oh my goodness, you people are amazing. And so I'm excited because they're interesting, you know, and I'm getting these introductions from people. And it's because I actually was specific about my ask. I didn't just say, you know, adding in that Scotsman Guide part prompted their mind to go, oh, I know somebody.
That's so true. Every guest that we've had on that we then asked for a referral for another guest has been like amazing.
We have been good at that from the start.
And sometimes they haven't even given us the introduction. They're just like, oh, you should ask this person. I'll send them a LinkedIn message. And I'm like, oh, they responded to me.
Yeah. So like use the guests that you get because they're all networked, right? Like, so this guy, Wally, I don't know if you've listened to this episode, but he does $200 million a year, works 24 hours a week, takes 20 weeks of holidays. And I just fell out of my chair. I'm like, nobody does. And he owns like 400 rental units. I'm like, who is this guy? Right. And so the people he knows are pretty freaking awesome. And so all the introductions have been like awesome. Somebody I'm podcasting with later today is from that introduction. So I'm like, giddy up. I have no idea what we're going to talk about, but I don't even care because I think it's going to be fun.
Yeah. I want to circle back to one thing, your unique ability and you allocating 80 or 60% of your time to it. So what is your unique ability?
I think my unique ability is I can find other people's superpower and then see if it's repeatable. And then if it's repeatable, other people can copy it. So not every superpower is, you know, copyable. So like Michael Jordan can dunk from the free throw line. Can't do that. But what I find, I love figuring out what somebody's superpower is and then going, okay, and then creating like a framework or a system that someone else can go, okay, I may not be as good as that person, but I can do way better because I'm following like a model that is more accurate. That's the part. I love that part.
Yeah.
So that's what the podcast, why I would never stop doing them is because I'm constantly finding new frameworks. And the thing I do now on my show is I ask them like, what are the 2 superpowers that people say you have? If somebody were to know you really well and they go, oh, this and this, I'm like, great. That's all I want to talk about. I don't care about anything else. Because those 2 things, if that's their superpower, that's where I'm going to find the most value versus, well, we could talk about 50 things and, you know, your childhood and not sound rude. I don't frankly care. Like,
so what's your second superpower then? If your first superpower is finding somebody else?
Finding it and the second is simplifying it. I think they're related. And it's the curiosity that drives me. Like I will routinely interview somebody at the end of it. They're like, oh my gosh, that was an amazing conversation because their superpower, you're so used to it. They can't even articulate all of the ways, like they skip steps. For them, it's like, oh, this is what I do. And it's 4 steps. Like, no, hold on. There's actually 12 steps in there. And there's some really important details that if you don't know how to ask the right questions, you'll miss. And so I interviewed this girl recently, Michelle Castle. I don't know when her show's coming out, but so she does these classes for real estate agents. And so she went over top level. I'm like, okay, stop. Let's go deeper. And then when she's done, I'm like, there's so much that are second nature for you because you've been doing it for years. But if you don't know how to ask good questions, you won't find those things. So that's where I find my superpower is in like listening and being like excited about what they're saying and then helping them uncover. Because then the audience gets served too, right?
It's so true. When you talk about your own stuff, you just think it's normal. Right? Like you talk about doing transactions, Matt, and like everyone would just find gold nuggets in that. But for you, it's just the normal day to day.
Like, especially to do with real estate agents, all the changes happening right now. Like we have like the new laws coming out, the interest rates, the mortgage situations with people's renewals and stuff like that. Like I deal with this all the time. So I think even making content on the internet or talking to clients, like, you don't know all this stuff? Like, no, they don't know all this stuff. Like, but for me, it's almost old news, but you have to remember who you're talking to.
Yeah.
You know, and you are a wealth of knowledge if you know it or not.
Right. We often miss that part.
Yeah.
What is your biggest regret then in, say, the last 20 years of your industry? Well, I'm just thinking
on the table.
If like the easy one is finding all the superpowers, and I will say Denise asked me to ask this question. I was talking to her.
Oh, I know what my biggest regret would be. I would say in my 30s, because I like to create things, I did not want to listen to any coaching. It was only in my 40s when I started paying for coaching. I've spent a lot of money on coaching, and it was a game changer because it's like you're getting this IKEA furniture, and you're like, I don't need to look at instructions. Like, I'm smart. I'll figure this out. And of course, you put it together and you realize one of the panels is backwards. I've done this. You got to take the whole thing apart to flip the panel over so that you can make it look right. And so that's just a waste of, now I'm at the age, I'm like, I don't want to waste any time on that. I don't want to rebuild this thing. The mistake I made was not really like taking coaching and being like, find the smartest people I can. Tell me what to do and I'll copy it. I will iterate on top of their ideas if I can. But for sure in my 30s, I was like, I'm just going to do myself. That costed me big time.
Yeah. Like, so what kind of coaching do you do? Podcast coaching or
any area that I feel like there's a gap or I feel like I'm getting stale? So I hired a podcast coach recently, and I've been doing this for 10 years. I've been doing it for longer than him, but this is his profession and he's talking to people every day. This is his focus. So I hired a podcast coach because I was like, I need a tune-up. And so I will hire coaches for sales, marketing, where I have a deficiency or an area that I want to learn, I'll hire a coach. Like that guy Wally, I hired as a coach. I'm like, hey, I want you to coach me on, you've built a successful business and somehow kept your family as a priority. I've been able to do the business side. I've been terrible at this thing. So he's like, sure, I'll do that. And so we worked out an arrangement where he's helping me. I did my first call with him yesterday. It was fantastic.
It's probably the accountability of paying for something too, right? If someone's going to give you free coaching, you'll be like, yeah, sure, whatever. And maybe you go through it. But as soon as you pay for it, you're like, I want the most out of this.
Yes. And I found that the more I spend on something like, and it's just in general, the more people will put effort into it. So the most I ever spent on coaching was $75K US for 1 year. And that wasn't including travel to 3 different venues that I had to pay for travel, accommodations, and it was worth every freaking penny. And so that's something I didn't know in my 30s that I would say my younger self, like my son is 17, he wants to get into sales. And so I have him booking calls for me. He phoned you actually.
All right. That was yesterday.
That was, okay. Yeah. So I'm like, hey man, we're going to start you off with baby steps. So if I wanted to build a salesperson, I'm like, okay, we're going to start off with easy stuff. And then I'm like, okay, I've been doing these improv classes. I'm like, you're going to do improv classes because these are going to help you think on your feet. And I'm just going to layer in all of these things. And I'll get him coaching too throughout this, but just layer it in to get him there faster. So,
yeah. Oh, interesting.
Yeah. Okay. So what do you sell you?
Well, actually to book a call with Scott to talk about anything I want to work on or issues with the brokerage or opportunities. And I was like, you know what? I'm chatting to him for an hour tomorrow. I don't want to chew up any more of his time. But if I knew it was
I need to hire you to coach me to how to get off the calls with those kinds of things. I get those sales calls all the time.
Oh, it was good. I appreciate it. I mean, that's the nice part of you running the brokerage is although you're incredibly busy, you're very approachable, which is pretty nice. What do you see changing in the next kind of 5-10 years in the mortgage industry? Obviously, there's AI and stuff like that. And I know you're not really weeds deep in lender guidelines, but I guess what's the next opportunity for brokers or homeowners or real estate agents? What's kind of the direction of the industry we're going?
Well, I think that we're going to move to more, it's already happening, but you don't realize it, but automated adjudication. So using software to do some of the heavy lifting in terms of underwriting files. And so I feel like that's going to continue. So that's good. That'll make our jobs easier. I think that in the future, you're going to have fewer brokers doing more volume. Sales and marketing is not going away. Because at the end of the day, if you think of this, you can walk into Scotiabank Arena in Toronto, everything's Scotiabank. And then you walk out and you talk to a mortgage broker and you get a mortgage at TD Bank. And it's they spent a lot of money and it did not convert them into a customer, right? Yeah. And, another bank, BMO, just came into the channel and they're slowly rolling out to more and more brokerages. It's because they're they can't get into every nook and cranny of a community like really good salespeople can or community people can. So I don't think we're going anywhere. But I think that brokers who don't adopt technology, who don't adopt AI in the parts of their business that they can, who don't get good at sales and marketing, because that is what we get paid for. At the end of the day, if you think about it, the people that work at, if you're talking about Scotiabank, they know their products better than you do. They are better at underwriting than you. What they can't do is they can't go find that customer. And that's what they're paying you for. And so I don't think that that's going to change. I think that it'll become more competitive, but the people you guys are already ahead of the curve in that, this podcast is effectively marketing in terms of getting your name out there, getting introductions, meeting people. So people that aren't doing that, they're going to get steamrolled. So I feel like that's a massive opportunity. So that's one thing I think is going to change is just this automated adjudication it'll be a benefit mostly. And then the people who don't want to adopt the new technologies are going to get just left behind.
I feel it's AI is kind of like when computers came out, but times 1,000. With how fast it's going to take over everything.
Yeah. And I don't think it's going to replace, the great thing I like about my podcast, I get to do a lot of research. And so I found a guy down in North Carolina who was working with a lender that is completely AI. There's no people. They basically send in the documents. It goes and pulls your income from the income providing companies that do all the checks, the payroll companies. It pulls your tax information, pulls your property tax information. It comes back. Yep. We'll give you a line of credit up to 95% loan to value and up to $500,000 limit. And it's all done through a machine. and you negotiate with the machine. The machine will come back to you with like, hey, do you want this rate and this fee, or do you want this fee and this rate? And that either will work or it'll be a catastrophe and they'll lose a pile of money. Because
I feel like customers are actually going that way, where they want less interaction. A lot of customers I find don't want the phone call, where some you can pinpoint, you're like, oh, I need to call this person. Like they want to get on the phone for 5 minutes and resolve this easy. But if you get somebody that doesn't answer the phone and they just want a couple text messages or emails, they would rather have like an automated system where they also push the button.
Like, just think about this right now with a lot of people struggling financially. They probably don't want to tell a human that they're missing their payments or that they're...
Yeah, it's funny you say that. So they feel more comfortable talking to
I'd rather just tell a computer and it tells me that's up, you know? Like,
yeah, so there's going to be more of that. But I think, so in the US, though, they're much more aggressive in banking. Like they're okay if banks fail. Like they fail all the time.
Yeah.
In Canada, that won't happen. And getting a bank license is nearly impossible. They've only issued a couple in the last few years, like in the last 10 years. And they are really strict. And so they're going to always be ahead of us in that stuff, because this company that's doing this they could lose all their money. And like, you know, in Canada, that would be like terrible. They would never let you do it. So
is the evolution side of mortgage broker, like, are we taking over more of the market share than banks?
We have been. So like in the last few years, and this was why you see some institutions coming into the channel. It's like, dang, why compete with them? Because let's just use them as our lead source. Yeah. So yeah, we are a higher percentage than we were for sure, but it depends on the type of business. We're great on purchase. We're great on insured, you know, rental, business for self, any of that kind of stuff. Typically brokers are really good at. There's some stuff that the banks are definitely better at than us, but like, that's fine.
Mobile home parks. Yeah. But that's the easy conversation too.
Just tell them, like, you're better off to just be like, you're not fit, man. Like, you know, when I was brokering, I would do that all the time. I'd be like, I don't want to waste my time. And you build more trust. Telling somebody no actually often builds more trust than trying to make a square peg fit into a round hole.
We just had this topic at our meeting this morning at our office, how sometimes saying no, like, I'm not the perfect person, I'm not the right professional for this, builds more trust and builds more of a referral in the long run than trying to do it yourself. So that's interesting you brought that up.
Yeah.
I heard you say one thing, I don't know where it was, maybe a month or two ago. It was probably on one of your podcasts, but one of the broker owners sees basically the real estate market from how many credit pulls are happening within their brokerage, which I thought was actually really interesting. And I know myself, like, I've been much busier. What have you been seeing in the background, or have you reviewed that at BRX? Like,
so I've just referenced if you're listening. So usually credit pulls happen way early in a process, and you will pull credit on people that A, don't qualify, B, change their mind, like 100 reasons why. So there's a higher number of credit pulls compared to the number of actual funded mortgages. And so I looked at the ratio between credit pulls to funded mortgages and kind of came up with a number that looked like it was about right. And the number was actually off. So when I had done it, I thought that, like, based on the credit pulls that we had it was 60 days before credit pulls we had in November, I was expecting us to have about 150 mortgages funded in January, but the number was like, I think 175 or 180. So it's not by a lot, but we actually had more funded mortgages than my, you know, non-scientific formula came up with. But it's just a leading indicator. It's not a perfect metric, but it will give you some measurement in terms of what's potentially coming down the pipeline. And so
probably pretty seasonal too, eh?
Yeah. Well, mortgages are seasonal for sure. Like, you know, people don't usually want to move as much in the winter. And then if they buy a property in the spring, their mortgages are going to renew in the spring. So then you're going to have renewals are going to happen at the same time.
I mean, like, during the winter, you must have almost increase, but more credit pulls in the winter and then the summer.
No, it's way more in the spring. Like, that would be low. So for us, like, the number of credit pulls in November was lower than it would have been like back in July, because it was,
interesting.
Yeah, I feel like most people are like, okay, I'm just going to hunker down for Christmas, you know, enjoy the holidays. And then when they start doing their taxes, they're like, oh, maybe I should look at, you know, maybe my income's higher this year or something. But are you seeing the market like this time this year compared to last year? Like, is there more activity? Like, we're seeing it, but
I see it. The problem that we have, I'm not a great barometer for that, because our brokerage keeps adding more people. And so even if everybody was doing less volume, it would look like we're doing more, because when you add more people, it's like, well, our volume went up just from that. So anecdotally, when I talk to people that, especially in Ontario, I feel like there's a pent up demand, like, that didn't go away. The demand hasn't gone. And so they're kind of just waiting. And I feel like when we see that first rate cut, we're all herd animals and we're just going to follow, oh, time to buy. And now they're all going to run back to starting to buy.
I agree with you. That first rate cut's going to be, going to be fireworks all over this.
Yeah. People are going to go crazy. And then they're going to be like, it's time to get in. It's time to end. Like, it's just human nature.
Yeah. Yeah, everyone wants to outsmart the next guy by like
following everybody else.
Yeah, exactly.
I've said this a million times that people are waiting for prices to go up before they start buying. So like the prices are low now, but I want them to go up before I jump in.
And you're going to be competing. So what's going to happen? People are waiting, and they're all waiting, and they're all going to go back at the same time and be like, oh shoot, now I'm competing with all these people, and now the seller's like, sweet. Like
now I just saved $700 on a home inspection.
Yeah. Well, and I mean, you've also said you've always done fairly poorly.
I'm terrible. I'm the worst at predicting the market. So like, do not listen to anything I say when it comes to timing the market. So
yeah. What do you see? I mean, I know this is a question you just said don't ask, but what do you see in the Okanagan?
Well, I'm not buying, so then you're probably good. Like,
so now's the time to buy.
Yeah, like
buy it perfect.
When I buy, it's usually the peak of the market. So at least the last 2 cycles. Okay, so this is again not scientific, but the last 2 cycles, I bought at the peak of the market both times. Like January 2008, right? Bought a property. July is like subprime crisis. The bottom falls out, and I'm like, oh, that sucks. And then March of 2022, and
that is the peak.
That was the peak.
But I mean, a lot of people say that as well. I mean, prior to your last purchase,
I'm fine now.
Yeah.
Like here's the thing: if you hold it long enough, you're fine. It's only if you have to sell.
Speculating.
That's exactly right. If you're going to hold it long enough, it will not make
any surrounding error. But if you have to sell it, that's when you get like your hand.
Like you talk to people from the 80s that have been through all this. It's like, do they really care if they bought in 79 or 84? Like no. Like
it makes no difference.
Yeah, exactly.
Okay, well, something you are successful at.
Not predicting the market.
But you are pretty much like a serial entrepreneur. You've created a bunch of businesses. You've sold them. Like, what makes you successful as someone creating businesses?
I would say I tend to, this is a learned habit. This wasn't how I first started, but I tend to only want to build things that people want to buy. So I will do I'll try and build like the minimum viable product. What's the least amount of thing I can sell? And if I can't sell that, my assumptions are wrong. And so then it's like, okay, like for instance, Bricks as an example, we're a brokerage. We had more than 100 agents. We didn't have a website. Like we didn't have a company website, which most people would be like, oh, you got to have a company website and all the, and I'm like, I didn't even think. And I only got one when somebody reached out to me and said, hey, there's people running ads on your company name. You probably should have a website. And I was like, oh yeah, okay, we can do that. And I set one up in 10 minutes with a AI. And I was like, whatever. Because to me, that stuff doesn't matter. Like your website, unless it's the thing that, I will build a landing page, a landing page that you need. So that's what I'm saying. What's the minimum thing that I can do and then test my assumption. And then if it's wrong, I'll, adjust. So I think I've gotten better at that. Like I will not spend time and energy on things if I feel like there's no market for it. Even if I like it, it's like, who cares?
Yeah. Well, I guess flip side to that question, then maybe I don't know. Maybe I've only heard about the successful stuff. But do you have failed companies?
So many. Yeah, there's so many dumpster fires, man. Like so many things.
So the lesson is just keep trying as many.
Yeah. And I think
it's not bad. I think that's a good lesson.
The dumpster fires are actually where I learned this because I jumped into things because I'm like, this sounds like a great idea. And I was like, what the heck? I didn't give this any thought. And so like, that for sure has been. And my wife, she would be like, she knows all the dumpster fires and she knows where the bodies are. She'd be like, oh, like, she's seen all of it. And there's no, I can't snow her and be like, oh, she's like, yeah, right. Whatever, buddy. Yeah, I've made tons of mistakes. But the big thing that I've learned from those mistakes is what's the smallest thing that I could try and sell or sell the idea. And then if that works, cool. Then put more energy behind it.
Well, I mean, yeah. When do you know to cash out? Because like when you've sold
sometimes, so this is a mistake I've made in the past is that if I look back of the businesses I've sold, I probably wouldn't have sold some of them if I was a better entrepreneur. I would have just brought in people to run them. And I didn't know that I could do that. I didn't know that there were people out there that were actually better at running things than me. And so that was learning. Because you can build things. I'm the kind of person I like to build things. Although the brokerage, somebody said to me the other day, it's like, hey, so you're getting bored? I'm like, no, because it's so much more complex. This is like a video game with like, it's like all of a sudden a new video game, like there's levels to this stuff I didn't even see. And so I'm quite enjoying the complexity of it. But I didn't realize how you could just find great people and like work out an arrangement and both you win. Yeah. That's what something I would do different. Because what would happen is I'd have this thing going and it'd be okay. And then I'd have something else and they're competing for my time. And I'd always say, I can't fly 2 planes. So one of them is going to crash. So what am I going to do? I'm going to sell a plane instead of find another pilot, let them fly the plane, and then I can have 2 planes. Right?
Yeah.
But I really didn't know that I could do that. And this guy that I talked about earlier, Wally, like that's what he does. He's got like 9 other pilots. Like somebody runs his commercial business, somebody runs this, and he calls them an integrator. There's a great book called Traction by Gene Wickman. Yeah. And there's a visionary and integrator. Integrators are people that take your ideas and execute. He is really good at that. And so that is something that I did not realize. I was like, oh, shoot, that probably cost me a bunch of money. I know it did. It cost me a lot of money, but I don't live in the past and regret. I just like, whatever.
Yeah, but then it's like you leapfrogged and got into a bunch of
you learned the lesson, right?
Yeah, you try to. I mean, you definitely try to do that. But I try to make sure that whatever I build has a market for it and scratch my own itch. The other thing I'd say is like, would I buy this if it existed? Or if I wouldn't, then why am I doing it? Like, that's important.
Well, yeah, it definitely did cross my mind. I was like, I wonder if Scott's going to sell bricks at some point because it's...
No, so the plan is still to go public, right? So like, but the timing right now would be terrible. You just would be not the right time. But like, within the next 5 or 6 years kind of thing, I think would make sense. But we need to build it bigger and get more value. And there's some other layers that I want to build in there that will create more value, like stuff. But everything's takes time. You can't do it fast.
Don't worry, this thing's going to blow up as soon as this podcast gets released.
Yeah, you're like, boom.
Hey, if brokers want a new brokerage, reach out to Scott.
Yeah.
Or his son's going to reach out to you. Either way.
Exactly.
Yeah. Okay, we've got to start wrapping up because we know you got another podcast to jump onto. This is a funny question for you, though. If you could buy one property in the Okanagan in the next 12 months, what would it be? Could be investment, personal, whatever. But we're basically just going to...
Probably, well, right. I would say the deals are going to be on condos. In this market, like given what happened with Airbnb, like there's going to be, if I were to buy anything now, I'd probably buy a condo because I got 3 kids. At some point, I'd like to eventually help them all with their properties. And so,
we've said that a lot in the past few
Honestly, the condo prices are for sure coming down, but they won't be down forever. So I agree with you.
I think that this is going to pose a great opportunity for buyers and not so much for the people that own them, but that's how things go,
Yeah, especially people banking on the income from the STR. So I agree. Yeah. What's the best thing you've ever spent money on?
Coaching. Yeah. Honestly, because like a new idea or new perspective can open up a whole other possibilities that you didn't even know. So I'd say coaching and mentoring would be the thing I spent in terms of large ticket. Small ticket, recently I bought this cold plunge tub, which I quite like. It was only a couple $grand, but it was like...
One of those steel ones?
No, it was basically like a deep freeze that a guy converted into it's got a pool liner and it's wrapped in cedar and it's got like a timer and like temperature gauges. And I haven't been electrocuted yet, so it's good. You find one day you'd be like, oh, he's dead. He died in this friggin' deep freeze. I always unplug it when I get in because I'm like, I have no idea if this is...
Oh, do you? Yeah.
Oh, yeah. I'm like he said, just unplug it when you get in. I'm like, yeah, don't worry.
It's amazing how these things take off. Cold plunges, right? Like gym I used to go to, like everyone seems to be having cold plunges. There's new businesses when we were talking about downtown. And Global Gym, I used to go there. I don't anymore because I have a home gym. But they sent out this email and said, yes, guys, don't worry. We're getting a cold plunge soon. I'm like, man, this is just taken over.
I should just open up my pool in the winter and start charging cover,
Yeah, come jump in my pool.
Yeah. $5.
Yeah. No, man, it's a hot ticket item. You could probably cost like $75.
Well, I looked at what some of them are like $10,000. Like some of these tubs. I mean, they look fancy, but I'm like, I don't need that. Like, how many bags of ice do I need to buy to justify a $10,000 tub?
Yeah, that's fair. What's your favorite charity or how do you give back?
I like the food bank a lot. And I like giving money to the food bank because the food bank has like these buying arrangements. And so they can often get like $5 or $7 to every one you give them. So giving them a can of soup, well, that seems great. But like give them $7 and they can buy probably like, 4 or 5 cans of soup.
Yeah.
And so I like the food bank and feeding people. Like, I don't know. That's a charity that I've always like, if we do anything, it's usually to do with that. I just like it. I think it's good.
Nice. How can Taylor our listener, help you or your business?
I don't know, man. Just like send business to you guys so you can keep going what you're doing. Like, so send business to Taylor Mortgages, send you real estate deals. Like, I think you guys are on the front edge of what, like as I said, people that are in the sales and marketing, you're going to be at the front edge of this. So like send you guys business. I'm good. Like,
yeah, I appreciate that.
Yeah, you can pay me $20 later.
Yeah.
Okay, where's my $20 you guys promised me? I'm just kidding.
Yeah. You can take it in ice cubes.
Yeah. I'll take a couple bags, Mars.
You can jump in Taylor's pool if you want.
Yeah. Okay. Well, thanks so much for coming on. I mean, I know I get to chat to you once in a while over Zoom and stuff, but yeah, I haven't ran into you in a little while. So
yeah, thanks for having me, man.
Appreciate you coming down.
Fun very much appreciate it. It's awesome.